There are three things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important? I can't say which one's the most important. They're all necessary. You know, when you're looking for a contractor to do your house, there's price, there's quality, and there's time. And they'll tell you pick two of them. And I love that because it's true. You can either have low price and bad quality, but on time. Those are the things to think. But with investing, to invest in individual stocks the best, you have to have all three. The mindset aspect. First thing, you have to understand that the mindset of knowing that a cheaper stock is better for you is absolutely imperative. We're always taught, it's the one thing in the world that in investing, it's the only thing in the world that I see that people want to pay more for. We brag about the deal we got in our car. We brag about the sale item we got, the nice sweater we got. By the way, I got this one at the Polo outlet. This is a beautiful sweater. And I brag about that. We don't brag like, oh, I spent $10,000 on this sweater. Nobody would do that. But yet with investments, we're always trying to pay more for them. It makes us feel better. Two, the emotional side. When stocks are doing this, you have to sit there and remember, it's not actually going to go to zero, ever. On an individual basis, it could, but overall, there'll be a bottom. There'll be a time when the entire stock market will rebound. Because if the US stock market goes to zero, we have far bigger issues in this world than just where your portfolio is and where your money is. At that point, maybe money doesn't even matter. It just matters who has the most guns and who has the most land. I don't know. And the third thing is the process. So even if you own the mindset and emotions, if you don't have the right process of understanding cash flow of business, fundamentals of business, what that means about the future, the other two are useless unless your process is dollar cost average, which if you don't have mindset or emotions, if you can just figure out a way to have the process of dollar cost averaging and that's it, you are going to do very, very well. So the only way in which you can successfully value invest is having all three. And you're going to have strengths in one of those. Like for me, I'm probably weakest on the emotional aspect, and I'm pretty strong on that one. But my process is good. My mindset's good. The emotional side is tough. It's probably the hardest for everyone. Why? Because it still sucks to see a stock that you bought go down. You sat there and said, look, I love this company. It's going down. Am I wrong? I will be 100% transparent with you. It's hardest for me on smaller companies. The bigger the company, the easier it is for me. For example, I'm going to buy Google at some point. Right now, it's at $100 a share. Let's say I start buying it at 80. If it goes to 60, you're not going to see me upset. You're going to see me jumping for joy. You're going to see me so excited if it goes to 50 and 40 because I know that Google is a high cash flow business, great fundamentals, and they absolutely own their market. Microsoft, same thing. If I buy Microsoft at 160 or 150 and it goes to 100, you're going to see me buying more shares. Apple, same thing. On smaller companies, though, the companies that are around $500 million to $1 billion or $2 billion, it gets scary because you're like, wait a second, why is this company so low? But you got to remember, less people are following that company. So that emotional side takes over and it can be very, very difficult. So when I started to realize this about myself, about the emotional side, what did I do? I just consumed myself with people that I believed in, that I trusted on their knowledge and experience. Most of them I didn't even know. Warren Buffett, Charlie Munger, Howard Marks, John Hussman, these guys that I respected for a good process, and I just read over and over the same things over and over again. I found other value investors, Guy Spear, Monish Pabrai. I sat there and said, okay, what do these guys do? I brainwashed myself. And the great news is, part of that brainwashing is what led to the Everything Money community. When I sat there and started making videos a couple of years ago, I was using an Excel sheet to run a model for my stocks. And people on the videos would say, hey, how do I get that Excel sheet? So I decided to make the software. But along with making the software, we made this community. It has really helped many people, including myself, to sit there and understand where we are, where we stand on mindset and emotion. I think the process is very, very important, but the mindset and emotion is probably the most important part there. Being an investor can be a very lonely road. Being a value investor especially. It's hard to sit there and do that. When I started, I was alone. That's why joining the community was so important, and we can help ourselves. Being part of a community aspect of value investors helps each other. I see it all the time in our chat up here. People say, guys, I'm worried about the stock. And they'll say, hey, if your thesis hasn't changed, you've got to enjoy this. You've got to embrace it. Because it's something I always say. When a stock goes down, I use that as an opportunity to say, am I right here? And I go sit there and I reevaluate the company. I try to remove as much bias as I can. That bias of, I already own the stock, the sunk cost bias. how do I sit there and evaluate this company individually? That's what's great for the group. I love talking to my friend Gary, who's a value investor, a great value investor in Boston. Mo and I discuss things. I even discuss things with people that aren't even investors that say, hey, what do you think of this company? Do you like this company? Do you buy their products? That's the way I get around that. I look at a company like Sleep Number. Sleep Number's been hit hard in the last year. I'm a little bit down on my investment, but I keep going to people who own Sleep Numbers and they're like, I love these bets. It makes me feel better and helps me validate my original thesis. Now, it's easier for me to evaluate numbers than it is people's love for things, but that's why we have the community. It's a way for us as a group. It takes a village to be a value investor. It absolutely does. It's a hard road out there. And when you're alone in it, it can be even harder because you get mixed up in your own thoughts. That's why the thousands of people here are there to help each other to become better investors. So let me show you my process. Last night, this really hit me about Southwest Airlines. I do not own Southwest currently, but in full disclosure, I have puts on Southwest. Whatever you see here, it's very imperative that you still do your own research. So I went through and I was looking at my watch list last night, and I happened to come across Southwest, and my watch list has 89 companies in it right now. So, actually, I don't have Southwest in my watch. I think I took it off last night because I was ready to do some work on it. So let's go to Southwest here. So here's what I saw with Southwest. Here's a company that the stock plummeted during COVID, and it's still selling for below pre-COVID levels. But I noticed something about the company. Revenue in the last 12 months of $21 billion. Previous high was 22.34, so they're almost there. But then look at the profit down here. Their profit was $1 billion. That same year, they did 2.4. In the previous year, they did 3.47. So I was like, okay, there's a lot more potential here in terms of profit level for Southwest. And did they gain any market share? I mean, look how fast their revenue came back. They're pretty much back here. $21.15 billion in revenue. I love that. So I went to the 8 pillars. First thing I did, like, okay, which one of these were affected by COVID? Affected by COVID, affected by COVID, affected by COVID, affected by COVID, affected by COVID. I was like, okay, all the X's here are affected by COVID. I'm okay with that. And their 5-year PE and 5-year price of free cash flow, 3 years of that was COVID related. I'm like, okay, I like this. Now, this isn't a very mathematical process yet because there was the COVID incident, and that's part of the whole mindset and emotional side of it. You didn't have that mindset of saying, what was affecting this process, this whole entire evaluation? And I'm okay with all that. So then I went to analyst estimates in our software. I was like, okay, what are the analyst things? Okay, they're expecting this year to make $2 per share in profit. And look at this, in the next 4 or 5 years, it's going to quadruple. I was like, okay, if they make $8 a share and the stock's currently at 32, would I be willing to buy a company today for $32 where in the next 4 years, they're going to be making 25% return on that? Absolutely, I would. Okay, huge gains. Look at these year-over-year revenue growth numbers. These are absolutely huge. Okay, let's go to revenue side on their estimates. Mid to high single-digit revenue growth numbers. So not only are they growing, but they're going pretty steady for an airline. And remember, Southwest is a high quality. I usually don't like airlines. Southwest is a high quality airline. They do the best at hedging their fuel. And before COVID, they had 48 years in a row since they went public of being profitable. And I was like, okay, so high quality airline, high quality business. I like the fact they're focused. They're a good regional airline that has all the exact same planes because their thought is we're going to own the exact same planes so that everything, all our mechanics, everything, we're hyper focused. And I love that. Okay, so what's the next step for my process? Well, I go to my stock analyzer tool. Now, this is an important step. It's not to be done first all the time. It's not to be done last all the time. Sometimes I use it first to say, hey, am I even in the ballpark? Should I even spend more time doing this? But in this situation, I use this stock analyzer tool because I thought, okay, Southwest is back to its pre-COVID revenue numbers. What's going to happen when they get to their pre-COVID profit numbers? What's the company going to look like? So I did 10 years of analysis. I did revenue growth. I want to be conservative. I go 2, 4, and 6%. So if you remember, the analysts were estimating mid-high single digits for the next 5 years. So I went a little bit lower than that one for a 10-year process for 6%. Low side 2%. I'm like, listen, let's just say they don't do as well. There's a recession, things like that. They only grow 2% a year for the next 10 years, and somewhere in the middle of 4%. Then I did profit margin. So in the last 10 years, they had about 7% profit margin over the last 10 years. But a big chunk of that was COVID, where it plummeted big time. And even this last year, where they had $1 billion in profit, that's still only 5%, which is well below. I looked at their past years. Look at their past years before COVID. 22, 21, and $20 billion in revenue. They had 2.4, 3.4, and $2 billion in profit. That was over 10%. So on the high side, I went with 12, 10, and low side 8%. So keep in mind here, my profit margin on the low side is still higher than its 10-year number because it took COVID for that number to happen. And COVID is an extreme example of something happening. Like, if you're always planning for the COVID of the world, I think you're just never going to invest in anything, and that's the problem. So free cash flow margin, I tend to do the exact same thing because they tend to be similar with Southwest. As you can see, they're relatively close to each other. Not amazingly close, but over time they will be. Now for PE and price of free cash flow, this is a pretty standard company. Has some growth. I think it dominates its market and its industry in terms of regional airlines. So I sat there and said, if the historical average is 16, I'm going to go 14, 15, and 16 for both price of free cash flow and PE. Now for my final number, I'm doing my desired return. Now here, the higher desired return is more margin of safety. And the market's going to get me 9 or 10%. So I want a higher return than 9 or 10% to buy an individual stock with margin of safety. And the higher my assumptions, I want more margin of safety. So I go with 12, 13, and 14% return. I hit the analyze button. Oh, and it is on my watch list at $30. But look at this. The low side of 31, the high side of 58, middle side of 43, 44. So I look at this saying, okay, could I be wrong? Well, my middle assumptions, I thought I was pretty conservative. 4% growth, 10% profit margin, and it still has a value of 44 with some reasonable margin of safety, and it's still selling for below that. So for me, I sat there and said, okay, I use this process to say Southwest is a company I need to focus on. I need to do a lot more research on it and realize that. And that's a big part of the process. As you can see, I sat here and explained that process to you, and it probably took a few minutes. But if I did it on my own, it would take me about a minute because I got used to it. And that's the point of the community. That's the point of doing all this together. We learn from each other and we do this. If you haven't joined our community yet, and this sounds intriguing, I encourage you to go to everythingmoney.com, check it out. Here is what you get with it. It's absolutely incredible. For less than $1 a day, you get the mobile app, 8 pillars, 30 years of financial data, stock analyzer tool. Every day, Mo and I release content just for our users. Access to Mo and I, real estate calculator, stock screeners, retirement calculator, the community chat, and you can cancel at any time. There's no long-term commitment. And look at it. It's only $29 a month. Our competitors are way higher. So guys, it's a no-brainer. It gives you the community. The number of people who've even become friends in this community is incredible, but there are thousands of people here to help you out. So go to everythingmoney.com, check it out. And once you join, guys, tag me in the community chat, say hi that you just joined, and I will respond, obviously, because I'm very active in the community. Thank you very much for your time. As the market falls, one of the most common questions I get is, what stocks should I be buying as the market falls? Great question. We're going to get into it right now by looking at our process for how we buy stocks.